Okay, folks, good morning. All friends, all family, what's up? So much to get to today. Here in New Jersey, the smoke has largely left, although it did look like the apocalypse this morning as the sun rose. It was kind of scary, orangey red, blaring. But the humidity is down. I hope the same is for all of you. Dave Nikoski, how's the weather up in Minnesota? Has it gotten any better?
It's still got a haze in the air. Sun is definitely it's a lot more orangey out here. Let's just say. So I'm gonna make it. I've been sitting at my desk like literally nonstop, so I haven't even been able to get outside and enjoy the weather. But I don't know that I need to fill my lungs with smoke either.
I
So
hear that. Yeah, I was getting a little bit of what happens when you breathe in some bad stuff into your throat. And Yeah, I hear you about staying inside. I am gonna attempt to be outside today. I'll go for a run. I'll let you know if I choke. I'll send along a message. Hoping that it clears up for you as well. World Cup final weekend. I'm sure lots of people are excited about that. And we've got a market that is seesawing. Folks in the audience, please do me the favor. If someone these days tells you, I was right, right, and I told you so moment, please go ahead and take that with a grain of salt. Everyone is right today. In these market, every day is up a percent, down a percent, up percent, down a percent. Today we seem to be getting 2 days of down days. Chip sell off. Lots of concern around AI, and overbuilding and overdevelopment and oversupply. But yet for today, prices are super high. Apple is going to have to raise its prices on everything during the next unveil. And people are expecting $100, $200 price jumps in the new phones, tablets. There's going to be a full on refresh of everything, it seems, before the end of the year for Apple, and everything is going to go higher in price. So for now, there we don't have enough of supply, but yet the market is already out, thinking that the supply necessary or the demand eventual is going to dissipate. Sunday is National Ice Cream Day. So go out and enjoy a scoop or a soft serve, if that's your thing. And so, yes, yesterday, let me just go back. Yesterday, we were in the red all around. NASDAQ took it the hardest, down north of a point and a half. S&P down a half. Dow down a quarter point. And today, this morning, we've got a pretty similar tape in the futures. We had Netflix report. Um, So the concern about Netflix is a consecutive quarter of slowing sales growth, right? So fears that the company is plateauing. It has reached its peak in terms of growth rate, right? Not growth, but growth rate. But the second thing that was more, I think, more interesting for a lot of people that are not in the stock and are just looking at Netflix as an interesting bellwether as to where AI is going. The company touted that use of AI, generative AI, is being used on 300 shows, and they are strongly getting into the live programming business. So, what was old is new again, and AI is making it all a lot easier, cheaper. I don't know if the quality will be there in terms of if you like humans, if it'll all be there. But that being said, or humanity, I should say, or natural and real surroundings. But nevertheless, Netflix doing more with less. Go ahead, Dave.
Yeah, I think I discussed that with one of the purchases of one of the movie companies. Why go out and acquire someone and pay a premium? I think it was what, a Paramount deal, when you can do generative AI and you don't need the movie set. Like, it to me it sounded like a lot of sense at the time with Netflix saying something like that. I think that gives it, at least what I thought before, a lot more credence. So I think that with that takeout that we saw, and I don't remember the names of it, but that's something to think about. Anyone that purchased another movie company, production company, that that in hindsight, I think is going to be a bad deal. So back to you.
So I'm just going to give the counterpoint on that, which is I agree with you in terms of the go forward, but in terms of the go backward, it is very interesting how much revenue, percentage of overall revenue of movie studios is made from rescreening their libraries, right? I don't know how many times I've watched, I'm unfortunate, I'll just serially watch reruns. I've watched Top Gun and Top Gun Maverick, I think, a billion times. And it's not just me, it's a whole other generation of folks that have never seen these films, somewhat classics, right? And they're already done. The cost is sunk, and they get incredible licensing revenue that effectively is just profit that hits straight to the bottom line. And so a lot of these acquisitions are really about the library, not necessarily about the go forward production. But your point is well taken. Certainly, for go forward production value, it is diminished by the ability and the increasing abilities to utilize AI. Um, Other earnings that have come out, we had Burberry, which has been a turnaround story for a very long time. Um, for the first time in a very long time, it reported sequential growth in sales on a quarter over quarter basis. But nevertheless, the stock fell in London. I guess the expectations were much higher. By the way, Netflix in the pre market is down around 10%. That's a big move. And we've seen a lot of big moves lately. The biggest move of the week, I think, was the IBM move on their cautionary second quarter preliminary earnings. Stock sold off 25%. The big reporters of the week, story of the week, was around the big banks. We covered it. JP Morgan, Goldman Sachs, Citigroup. Citigroup stock did not climb. It has seen an incredible rise over the past 12 months. Jane Fraser, the CEO, has been touted. But the equity sales trading in all these companies and even fixed income, the fixed income didn't exceed expectations. Equity sales and trading revenue totally destroyed expectations. And that is because we saw an incredible amount of IPO activity, and that if the money that went into those IPOs had to come from somewhere, not necessarily cash piles that were just hanging around, well, something had to be sold, and then something had to be bought, or the new thing had to be bought, and broker dealers make money on both sides of that. Along with the chip correction today, as you would expect, Japanese and Taiwanese markets fell overnight. Japan down over 6%, Taiwan down 4%. The Japanese market is in technical correction territory, falling more than 10% from its highs. We have an announcement out from Verizon cutting 3,000 jobs. Not a particular surprise in terms of the ability of AI to probably replace a bunch of functionality there. And at the same time, dealing, at least on the cable side of the business, with a decreasing revenue line, needing to shrink expenses accordingly. And I'm a Verizon wireless customer. If you call customer service you're in AI land for at least the first 3 or 4 prompts now. It's not just one, and you can't just scream representative, 100 times over and you get a human being. They won't let you do that anymore. So, but the AI is getting better. It can actually, solve some problems, as I found out the other day. 30-year mortgages, 6.55%, up on a week over week basis. And it's the highest level in more than a year. And further making it difficult for us to climb out of a housing market, I don't know, logjam, let's call it, without other support, incentives, what have you, for housing. GameStop CEO Ryan Cohen came out and said he is coming for eBay one way or another. No details. He spoke on Bloomberg yesterday. No details on how he's going to do that. I'm not going to go ahead and throw shade on it. Let's see what he has when he has it, and we'll talk then about his ability. By the way, with respect to collectibles, everybody is getting into that game, inclusive of Fanatics is now in that game too. Fanatics, I don't know, one of the largest sports related private companies, um, you know, selling everything from merchandise to now collectibles as well. And they, I think, making money in collectibles is, you're just an auction house at the end of the day. So it's about, eyes and clicks and, how many people are adopting your platform versus another. All right. Why don't we get to, now that I've eaten up enough time and hopefully the room is full? Excuse me. Brandon, let's go to you, sir. Give us the part 1.5 of yesterday's AI diatribe.
Yeah, good morning. Good morning. I'm sure it's everybody's favorite segment. Happy to be back here talking about AI with you all. I will start. I'll say that we are getting hit heavy here in Pittsburgh, PA, with the wildfire stuff. It's pretty wild. So that's no fun. But also, I will one other thing before I get to the AI stuff. Ryan Cohen did a interview about 2 weeks ago with David Friedberg that I encourage people to go check out and watch. And he does get into some of the eBay stuff as well. And it was an excellent interview. It was really well done. And it kind of I always thought this guy was a little bit arrogant, and maybe he is. Maybe that's the persona he puts out there. But it's actually a really good interview, and I think that he does a great job with it. So please go check that out if you get a chance. But yeah, to get back to the AI stuff here, another nuke just dropped on Anthropic's IPO wishes here with Kimmy dropping a new model yesterday that is pretty close to or on the level of Fable, open weight, and it's way less expensive than Fable, and it's on the level of Sonnet pricing. So it's difficult keeping up with all these names and everything, but Anthropic has Sonnet, Opus, Fable, and so it's Fable level and beating Fable in some benchmarks while being cheaper than Anthropic's least expensive model, Sonnet. That's pretty crazy, and they're apparently dropping the weights on it. I believe it's next week or the week after is when it's scheduled to drop. So anybody can use it. Open weight model. And as we talked about yesterday with Thinking Machines dropping theirs as well, this stuff, it just gives enterprise users whose Anthropic's bread and butter the ability to keep everything in house, pay less than they do, keep and I understand. I think Jan made some great points yesterday. I hope he's in the room today, but if not, he made some really great points about changing light bulbs or streets and stuff. But like we have to think who the customers are that are paying the most. It's not the light bulb changers or the street pavers. The customers that are paying the most for these AI capabilities are places like, the banks, or it's places that are worried about security, or it's places that are doing really deep research. They're the people that are hitting the API the most, and utilizing this, and they're the heavy customers. Those are your heavy high end customers that are using it a lot. When those customers switch off of Anthropic, it takes away revenue from them and puts it towards these other models. And the biggest thing about the IPO and why I keep mentioning it is they're trying to justify over $1 trillion valuation, right? Over $1 trillion valuation for a company that has all of this uncertainty circling it. Like we can sit here and talk about how great of a company Anthropic is, and I do think I've said it many times. It is a great company. However, to justify $1 trillion valuation with all of this uncertainty, it does not make sense. And they almost have to do that. Their last venture round was raised at 965 billion. So they're trying to go out, obviously, at a higher valuation than that. And it's becoming near impossible for them to do so. Now we're seeing semis come down, semiconductors come down, and chips. Why is that happening? Well, it's because Kimi released this model, and there's a few other reasons, but that's a big portion of this, because it competes directly with OpenAI and Anthropic. And again, how do you justify the valuations of these companies? Now, to give you just a clean and clear example here, Kimi is valued, or Anthropic is valued 50 times more than Kimi is. 50x more. Just you can't, when it's on the same level of Anthropic's highest frontier model, you cannot justify that in any way, shape, or form. So David posted a funny thing. Dave Tallwell posted a funny thing earlier that Anthropic is trying to hire somebody to justify their IPO story, to craft this story. Yeah, I mean, you got a better chance of like climbing Mount Olympus and fighting Zeus than trying to justify $1 trillion valuation during this time of uncertainty. So that doesn't. I'm not saying Anthropic's going out of business anytime soon. I'm not saying that they won't have success in the public markets. They will, but not you. There's going to be a complete reset. It's my belief on the valuation of these AI companies. I think that the private markets got a little, we got a little hyped up, a little bit too excited with the valuations of this. And it's because over the last few years, venture capital, it's been a difficult position because crypto shit the bed. So much money went into these crypto companies from the large VC funds. That didn't pan out how people wanted it to. These funds needed something to be able to show higher and higher valuations. And then we saw hyper growth with these AI companies as soon as they were launched in the 2022, 2023, time frame. And so they just kept raising rounds at these crazy valuations, and that allows venture funds to go ahead to their LPs and say, hey, we got in at this at a $20 billion valuation. Now it's a $300 billion valuation, and so on and so forth, which allows them to raise subsequent funds, which then allows them to raise more fees because you're paid off of, the AUM of the fund. And it just kind of snowballed here. But we're getting to the point now that there's got to be a reset on that. And I think, again, I struggle to bring this up, but Dario keeps going out here and trying to tell this horror story of AI. And it's simply so they can, try to hold on to and justify this valuation of their company. And now that's all being thrown away when you've got open weight models that are out, that are on Fable's level of capability, and it's 50x cheaper. I just don't know. I don't know what you can do there or what you can say there. So I don't know. It's going to be an interesting time ahead. I think all of this is going to get repriced. There's no way the public is going to accept a trillion plus valuation for Anthropic whenever all this is out there. And enterprise customers are going to switch. I promise you. I'm on the phone with them constantly. I actually have a call on Monday. I'm looking forward to with a fund, a fairly large fund based out of Thailand. That we're going to be discussing a lot of this because there's even more happening. And then I guess the final point is Kimmy's CEO is actually a CMU graduate, Carnegie Mellon University, which is right here in Pittsburgh. He's a CMU graduate. How the hell did we not keep him in the US? How in the world did we not keep somebody like this guy in the United States and instead shipped his ass right back to China so he could go build a model that could, essentially destroy our economy? Because if AI fails at the rate that we saw crypto fail at, and I know people love crypto, blah blah blah, whatever. Crypto's failed from a private market standpoint, as all the money that was poured into these NFT companies and all these different crypto companies. Just from a financial standpoint, that's how I'm looking at it. So if it fails on that level because of these Chinese models and these other open weight models that end up coming out, we are in trouble. Look at our market is literally held up, propped up like a weekend at Bernie's by AI. So that's where I'm going to go. That's the end of my diatribe here, but I'm happy to talk more
Okay,
if we
so
want.
first of all, Weekend at Bernie's, folks in the audience, if you haven't watched it, go pay a tip to whoever's library that's in. You need to see it. It's very important. It's part of cultural, you know, critical knowledge. Uh, to go back to Brandon, let's go ahead and help our audience a little bit further, which is, look, I can't short Anthropic if that's your thesis. But that being said, if Anthropic needs to be repriced, what does that mean for chips, data centers, energy? What does it mean anything? Maybe it means nothing. Maybe it just means the AI guys are losers, but everybody else is still going to make out because compute is still going to be necessary. And in that vein, nothing's wrong. But if Anthropic has less revenue, that means they can't spend as much paying handsomely to AI data centers, in turn chips, in turn to energy companies. Go ahead.
Right. Oh, who was that for?
That's for
Was that,
you, my friend.
anybody else can
That
go
is
ahead?
for you. The hard question for you.
Yeah, I mean, I just think again, you just laid it out there. They can't spend as much, and neither will any other company. And again, when Anthropic gets repriced, so does OpenAI, so does every other model that is out there. And then
I lost Brandon.
Yeah, I
they're,
lost him too.
Oh, there you go. Oh, dude, the Chinese are
literally
getting.
the data centers. How do you continue?
You're
Bra-
cutting. Like, actually,
Brandon,
drop down,
you're
Brendan, and come back. We'll bring you up.
you're cutting in and out. By the way, on the Chinese point, I'm gonna go to Timothy and then to Eladio. On China, by the way, the economy in China only grew by 4.3% in the second quarter. We used to talk about how China cooked its books and so on. Whether 4.3 is right or not, who knows? Below market expectations, below Beijing's official target, and domestic consumption remains a concern. Housing prices in China, in case anybody's looking for a home, down 3.5% year over year in June. That's a market that has never historically gone down at all. It always climbs up and to the right. So China experiencing its own level of, I would say, disruption. Let's not go as far as to say distressed, because then they'll just shut this space down. Timothy, to you, and then to Eladio.
Just a second. I
Yeah.
just want to add demographics to have a role in it in China as well for real estate because they're losing people every year, like Japan now, yeah, because of the one-child policy, and they haven't recovered from that too. So you would expect a lot new apartment or condos to be available on the market. Go ahead, Timothy.
Yes, good morning, everyone. Happy Friday. Yeah, I just wanted to build on Brandon's point. I'll add on to that. I think Anthropic and OpenAI both lost their window of opportunity to go public at the current evaluations for sure. I think their market offer, although it's very good, I mean, they have very, very good products that they put on the market. But does it merit the price? And I mean, the rate at which competition is sprouting up all over the place is perhaps a rate no one really expected. But as we usually see, in my opinion, with organizations that rise very fast, they also often fall very fast. That's not to say that Anthropic does not have its place and space to play in the future, but definitely not at the evaluations that is currently evaluated at. I mean, the way enterprise organizations think about this, and I have these conversations every day, is way more from a flexibility perspective. You know, everyone knows that as long as we go on this AI journey, more and more LLMs will pop up left, right, and center. Some of them will be very specific for specific business units or specific tasks. There's just no argument to, let's say, for an organization of an enterprise level to say, okay, we will go all in with Anthropic alone. No, that's actually not at all what organizations are looking at. In fact, a lot of the times, and that's actually where platforms come into play again, and I think it's a good, let's say, argument for platforms on the market. We actually open up gateways to LLMs on the market, so it gives organizations the flexibility to choose which LLMs they want to use at the current moment, which might be the best for a current task, but it gives them the flexibility as well to switch in the future if anything better or cheaper, right, comes on the market. And there's a definite rise of cheaper LLMs coming from the East. And to be honest, like I speak a lot, I work a lot with education sector as well, specifically here in the UAE, but actually globally as well. I work with a lot of universities in the United States as well, and there's a lot of, these are research centers, right? So they also develop a lot of products, and man, the amount of LLMs that are being created even in education spaces specifically for language purposes or for research purposes, I mean, it's incredible. I can't emphasize it enough. So if the current evaluation of Anthropic is solely built on its output of LLMs, which might be superior in the market but super expensive, I just don't see the justification for something like that. And I think if they do not find other products to justify or support that valuation, it will crumble quite fast, in my opinion. So definitely from an enterprise perspective, there are definitely enterprise organizations that are using Anthropic and that are not necessarily looking to move away from it. But there's no means any loyalty towards Anthropic to say, okay, we stay with Anthropic for the next years, let's say, because we believe that they will be the best in the next, let's say, even month to come, right? Like these innovations happen so fast. So I think they lost their window of opportunity to go public at these, let's say, like crazy evaluations. Same for OpenAI. I don't see them going public actually with the current stack that they have. I don't think that would be a very wise move either. That's obviously my personal opinion. But it's crazy how fast this space is moving, and it reminds me actually a little bit on, when in the crypto space, when we had all these altcoins and altcoin season, like these new coins would pop up and rise to fame and in the public mindset for like a couple of weeks, and then they would crash and burn like a few weeks later. I don't see that happening for Anthropic per se, but I think a similar story could definitely be the case. And one other point I would like to make is, and actually Elon also tweeted about it a couple of days ago, but it's not because you're the best product on the market that you are a market fit either. I often make the comparison, like if you look at Formula One, for instance, I mean, they have the best cars, fastest cars, best engines, etc. But it's not what rides on. It's not what you see riding on the road, right? Like the road has normal engines. They're not the best, but they do the job, right? And that's also how enterprise organizations are looking at these LLMs. Okay, it might be the best, but for that price and for the specific job that they have to do we really need the best model? And 99% of the time the answer is no. So just wanted to give that as a bit of extra context. So if and when Anthropic goes public, be careful with the evaluations that they try to support, because at least as it stands now, I have to call bullshit on that.
Before I get to Eladio, folks, remember the story's not over yet. We sound like we are a chorus here, right? But the story is not over. The narrative can change still before this ends. And when I say this ends, I think at the very least this ends is talking about when these companies IPO, let alone far beyond that. We look at SpaceX now trading below its IPO price, closed below its IPO price, had an aborted, launch yesterday. But, the story hasn't even been written yet, let alone told. So I think there's a lot still to come. And the only thing I could say on that point is be here every day to hear, the thoughts continue to progress. That's the way we do it. It's iterative every morning. You got to be here with these folks, listening to what they're thinking, what they're hearing, what they're seeing on the ground is just really important. And not to say that we know it all. We certainly don't, or at least I don't. The rest of my speakers might. But nevertheless, please join us. Eladio, over to you.
Well, we're in a predicament, David. A heck of a lot was priced in hardware. We now see what the more speculative side of that hardware trade, how it's doing. I remember saying, really, just only a couple of months ago, or 3 months ago, when these optical hardware stocks were basically going gangbusters, that you just couldn't touch these. Well, now we're seeing the same thing in memory. So I'm going to basically listen to what the hyperscalers, who are the ones that are doing the spending, are going to tell us here as we approach earnings season for big tech and Mag 7 hyperscalers at the end, going into the end of the month and into August. The story has changed. I think these companies overdid the private funding side now, and I'm there might be even some regrets now that they waited this long to finance Series Z of their financing. I'm saying that in jest, of course. And we've been talking about this for more than a year. How late companies were basically going, IPOing, and now we find out that SK Hynix's ADR may have marked or had an inflection point here where you're raising more money to increase capacity and to keep up with the supposed demand that's going to continue. But what happens when the hyperscalers pull back or decelerate on that spending? Not even pull back, but decelerate on the rate of increase. And we've had two companies come out and say that their AI strategy isn't quite working out very well. We had, I guess, Meta come out, earlier, about a month ago, and now we have Google yesterday come out that they're delaying their Cap Gemini. Well, those delays, I think David was, or Brandon was one who said this. One of you, that this is not only impacting Anthropic, but this is going to impact basically every AI that's looking, to actually go public at this point, or any entity that is, and that's going to impede. So personally, I'm on a wait and hold. I do think there's been a lot of selling, and the biggest problem I see with the idea that we're going to see a massive rotation into small caps and into, say, real estate areas, is that there's going to be relief in some way, shape, or form from rates. We're not getting that on the long end of the curve. And we're certainly, we're going through a feasibility study here to decide how this experiment that we call the Federal Reserve, which was instituted in 1913, and now Kevin Warsh is saying he's very impatient, that they're going to reassess how they look at data. They're going to reassess a whole bunch of things. Well, that's great. But how is the market going to rotate now when the story that basically created one of the biggest rallies we have seen, I think, since 2000, since the dot-com bubble, when the story starts to fizzle out because the actual companies that are doing the spending are either maybe slightly, at least short run on the short run, tapped out on accessing the debt markets, and they've actually now started issuing equity, and now the story and the narrative of ROI seems to be falling apart at a very in the seams. How are you going to increase ROI on something you put so much money into when the actual model is being questioned because we don't know? You have the hyperscalers starting to add doubt. So I don't know. I'm going to wait and see. I certainly um, you know, um, wouldn't commit totally to semis, but there's been a lot of damage. And what I find very interesting is that all throughout this, NVIDIA's basically hovered at around 200. And here's the S&P, basically only 2 percentage points down from its top. But somehow the market has been able to rotate into other areas outside of tech to prevent its demise on the index level. Well, the question is this sustainable without lower interest rates? I believe it isn't. It isn't. And this is why I think the Mag 7 may again become more popular again, because we have this uncertain rate environment where the economy is too strong to lower rates. Uh, and sure, we got a reprieve in inflation, but how much was that tied directly to the fact that the price of oil had declined as much as it had? So there are a lot of uncertain things right now, and at the bottom line here is I think that the Mag 7, which were the ones that actually suffered the biggest decline in tech outside of software, which I can't touch. You just can't touch software at this point. It's unbelievable. Other than, like I said originally 4 or 5 months ago, cybersecurity. So the question becomes a very simple: what do we do now? I actually think right now, going into the summer, that the Mag 7 or I have a few other three names attached to the Mag 7 that I believe are starting to look like value. I mean, if you look at Netflix, Netflix already had a 50% decline. They're not buying, they're not able to buy Paramount like they wanted to. So it's pretty interesting, that a lot of damage has been done. So from a long-term perspective, I'm starting to see value develop here on the longer term basis for the area of the market that has been able to sustain its earnings growth in spite of the fact that they're doing the spending. So that's my 2 cents. I think that the Mag 7 may actually outperform some of these other areas until we get more certainty in where the rate environment is going to go in the future.
Excellent. Thank you, Eladio. On the Netflix point, by the way, one of the things that folks were speculating about is that Netflix, in losing to Paramount over Warner Brothers, and that we know, folks, for those that don't listen every day, the Paramount Warner Brothers deal is not a done deal. There are a lot of state attorneys general fighting against that deal on anti-competitive bases. But
It's purely political.
why? I mean, it's politically motivated, but they totally could win.
They can, but it is politically motivated. I just don't know that the antitrust that there really is. There's enough competition, and I don't think on an antitrust level, that you're right. They can, but it is mostly politically motivated, given the fact that all the attorney generals come from what
No,
type of
that is
states?
not true. There are a
No. Oh,
bunch.
okay. Very good.
There are
Very
a
good.
bunch
Thank
of
you.
red states. Bunch of red states. So
Okay,
no,
I did not know that.
that's okay. So in any event, there was speculation that Netflix would go after Lionsgate, which has been rumored to be up for sale, and now even more so than before. Netflix publicly denied yesterday on the call that they would be looking at Lionsgate. Take that for what it is. Let me get to Eric's hand, and after Eric, I think I'd like to talk about Berkshire Hathaway. Go ahead, Eric.
Just to add to what Eladio said, yes, the Federal Reserve, which was an experiment and is still there, is now going to be in a bind. They promised again yesterday, I think one of their members, I think it was Jefferson, promised that they would stick to the 2% inflation target. With the amount of money that the government is printing every year is just mathematically impossible, which means they're going to cook the books or cook the algorithm, whatever they use for inflation, even more. as if it was not manipulated enough before. So that doesn't bode well for me. It's going to be a big circus, which means we have to we have to look at reality when we try to position ourselves for this inflation, which is continue to come as long as the government has that imbalance where it keeps printing more and more money and more records amount of money. So the inflation will continue. So I want this to be very clear. The second point about AI, well, guys, I feel like we're becoming mainstream media. You know, what I was talking about a year ago, if not more, we're talking about it now every day. So it's like, Anas told us in February that London closed the Strait of Hormuz. Imagine it becomes mainstream media in a few months. Then we start talking about it every day. And then Anas will be like, I told you guys this back in February. So I feel like we're becoming mainstream media nonetheless, because we have a lot of people in the audience, some which are new as well. So it's good to put them back up to speed. But I just want to everyone to remember that for 1 year we saw this coming, the reckoning which we're having now. I had some opposition back then, but now it's becoming clear to everybody. Financial realities are inescapable. And Xi Jinping repeated yesterday that he's making AI a top priority. He wants it to be there for everybody, which means at a very cheap price, almost free in China, because he wants to enable his entire population to be creative with that, whatever they can come up with. And so this reckoning will only continue, and then government might have to step in, and then firms like Timothy's firms will have to make plans for if there are some bans of this model or that model. Then they will have to make a contingency plan and to be able to use multiple models as well, because we know that companies need to have redundancy and need to be able to mitigate risks like that, because and not rely only on one model unless it's already theirs and free, yeah. But otherwise, you want to have alternatives for the politics which are coming. Back to you, David.
Excellent. Thank you. Guys, I'm sorry if we talk about AI and chips and data centers and all that every single day, but it is so much of the economy. It is so much of what is going to shape everything going forward. And so that is important. I sent Brandon an article a little earlier about Harvey AI, which is legally focused AI, and they are diversifying. They have bought now a company called Benchmark, which I happen to know that's in the asset management industry. And I think they need to, play in multiple lanes. Um, at the end of the day, though, if large LLM models can do everything, the fact that you're a specialist in whatever legal, healthcare, asset management, um, I don't think it matters. I think you can easily get trounced. And the crazy thing is, yes, they may have a sticky customer base in law firms, but eventually everybody comes around. And when people come around, the downside in a lot of these, and I think that this is the important part of this is not like software as we knew it historically. This is you go to zero, not you still have customers and there's still revenue and there's still a moat and there's still somewhat of a wall and there is still adaptation if you hire smart enough people and your sales folks are good enough. No, you immediately go to zero because there's something that's either super cheap or free that does it all anyway and is constantly iterating anyway. And there's a new version available every 24 hours anyway.
David,
Yeah.
question: Do they even know how to spend new money that comes in with this uncertainty? That's the question. Like, how
Salaries,
are these business
salaries.
models changing as they're raising capital? Is the question.
Well, I'll give it to Brandon, and then I'll go to Berkshire Hathaway. Go ahead, Brandon.
Yeah, just a real quick point on that. So, Eladio, I'm glad you brought that up. I think that's excellent. They don't know how to spend the money, and that's its own issue. But David, to your point about Harvey, I think that was a good acquisition, and congrats to the Benchmark team. Um, Not to be confused with Benchmark, the venture capital firm, for those that know that. But when these specialized models that we've seen like Harvey and there's other ones that have been in like biotech, et cetera. And there's a few legal tech ones. it's not only about them competing with frontier models that can do everything just as well. The why I keep mentioning open weight models is these customers, these enterprise customers, the ones that are spending the big dollars, they can train their own models. They only have to bring in one, two, or three forward deployed engineers to come in and train these models specifically based on their industry, these open weight models specifically based on their industry. And then not only that, specifically based on their company's information, their private information, their I can't think of the right word here, but their information, proprietary information that betters their company and better serves their specific customers versus using these general models or the Harvey type model. And oh, yeah, again, it's less expensive to use it. So would you rather pay, millions of dollars to Anthropic, or would you rather pay a couple forward deployed engineers to come in and, pay them probably good salaries, 250K, 300K, 400K a year, whatever, to train based off of your own information, and then you keep all of your own information. That's why these open weight models are so important. And yeah, it's going to take huge market share away from the big boys. And people complain that I just mentioned Anthropic. I'm talking about Anthropic because they're the ones that are saying they want to IPO first by October. That's why we're mentioning them. But it's every one of these frontier models that we've come to know, including OpenAI, which I'm a bigger fan of OpenAI just because I use them more. I think they have better leadership, and Sam's not on a doomerism tour, but I just think that we're vastly underestimating how much these open weight models are going to take away market share, and not only from them, but the Harveys of the world too. And these other specialized models, it's not going to make sense to use them or to utilize them when you can train your own models in house that are just as good, less expensive. It doesn't make sense.
Okay, let me talk about Warren Buffett and Berkshire. We have not spoken in a little while about it, and there's been a couple of developments. First of all, it seems that Berkshire Hathaway is accelerating its buybacks, which I think is a bold move by Greg Abel. But all that being said, he's got a $400 billion cash pile, so buying tens of billions of dollars of stock back is not the greatest risk in the world. He has made some tactical moves recently. We'll be waiting for their earnings call and how much they've bought back, and also what acquisitions in stocks they've made and what they've sold. Warren Buffett has now said that he will sell his entire Berkshire Hathaway stake, um, which is, I think, about 12% of the overall. He will sell it over the next 8 years. And he will donate the proceeds to charity, as was expected. He has left the Gates Foundation out of his charitable allocation from the sales. I think a lot of it has to do with Jeffrey Epstein and Gates's unclear involvement with it. And so, over the next number of years, I would expect that certainly Warren Buffett will be consulted as long as he remains alive and well, and may he live a long and healthy life. Certainly, he'll be consulted because of his sagely wisdom. But that being said, he will own less and less stock by his own choice. Nothing wrong with that. And therefore, will have less and less influence over Berkshire. If Greg Abel is a successful heir to Warren Buffett, this will go down as, I think, one of the greatest transitions of power ever, certainly in the financial world. And hopefully Abel has learned well enough and has good enough luck and wind at his back to be successful over the next while as this transition goes on. But it is certainly no foregone conclusion that this will go off without a hitch. I'm sure they've all thought about this. This is a really important thing for Berkshire as an entity, for Berkshire as a force in the market, for Berkshire as a legacy of Warren Buffett and value investing. But we will have to wait and see. I think from quarter to quarter, I think it'll just be interesting if you are not a Berkshire Hathaway stockholder. It will be interesting to watch how this transition goes. I think it is one of the most consequential that we have seen in the asset management world. We see it a lot at hedge funds, private equity funds. Some of them fail, some of them somewhat succeed. This is the most public and I think the most consequential of all asset management transitions. So I will keep you posted on all that, but I think it is incredibly interesting to watch and wait. Along with everything going on with Iran, along with the president's speech last night about voting and elections, the big thing that we've been focused on the Hill has been the Clarity Act relating to the crypto sector. Trump had meetings yesterday with members of the Senate to try to convince them. The sticky point that Carlo, who is traveling the end of this week, so cannot join us, the sticking point has been around ethics provisions and what the president has or can or can't do with respect to involvement in crypto. And that seems to be the sticking point. I don't think that there is any path forward unless the rules get somewhat changed, meaning currently there is no rules. Democrats want some rules. Democrats are needed in order to pass this legislation in the Senate. And so, unless the rules get changed, unless there's some movement out of the president, this is probably not going to go anywhere and will probably die with the summer recess. And then, after that, all bets are off because everyone will be focused on the midterm elections. Nothing will get done. So we've got another couple of weeks. We'll see if anything, if there's any breakthrough. But as of everything that was reported out yesterday, there is not. And the only other thing I wanted to say is, I'll just mention this for blanks and giggles. Um, the president is now offering preview access of some sort or faster access to his posts on Truth Social for a fee. Now, we all know that his posts move markets. And maybe he and his family and close confidants are trading before those posts even go out, as has been speculated upon. Well, if you're able to pay for advanced knowledge before the rest of the market moves, obviously that's some valuable content and valuable access. And so folks will pay for that. Folks are up in arms about this. Certainly, everybody up on Capitol Hill is up in arms on this. I just want to make you aware of it. I don't have anything to say on it, but it is a buzz, as things go in terms of insider information and so forth. Okay, Anis, good morning, sir. Please give us your update of the day.
Good morning, everyone. Today, kind of a difficult day because of the things that's been happening at Hermes and the level of lies and misinformation. And I will mention some of them later. Oil prices are up by more than $2, and Brent is above 86. And we still have people who are saying, look, this market does not reflect reality. Someone is playing the market, etc. But look, they've been saying the same thing every single day for 4 months, and they need to wake up. I mean, just continuing saying this forever is not going to solve any problems. We've seen tense confrontation in the last couple of days, where the U.S. attacked certain positions in Iran, and Iran attacked certain positions of the supposedly of the United States in a few countries in the Middle East, including Kuwait and Bahrain. And the Iranian foreign minister basically justified that we are not hitting the Arab countries, we are hitting American interests in the Arab countries, and you cannot have them there and kind of claim or ask why you are attacking us, etc. It's the same old propaganda they've been talking about, because the question is, okay, you have other bases in other side of the world that are non-Arabs, just like Kazakhstan and Turkey and others, and you are not doing anything on that part. So why only it's one-sided? I'm just presenting what's being said out there. Okay, this is not my opinion here. There were attacks on Bahrain, again, Kuwait, Qatar, and Jordan. There were no attacks on Saudi Arabia and UAE. There were 2 attacks on tankers, and if you look at the location of the attacks on tankers, you can see that they are being done by cronies of the IRGC, not the IRGC, because the IRGC cannot get to the Indian Ocean or other parts there, or close to Kuwait near the Iraqi border. These are the acts of their cronies. Here, I would like to point out something important that I mentioned before. I would like to repeat it again. The faction that is causing the problems within the IRGC is not only powerful faction in terms of being trained and they have the weapons. This is the international faction, which means that they have those connections with other countries, including places in South America and Europe. So that's where the danger of this group is. And this group being hit really hard by the United States in the last couple of days. So the United States is not hitting Iran in general. It's not hitting the Iranian government. It's not hitting the negotiators. It's hitting those who are causing the problems. For those who are looking for details, I already put the link in the nest. I had this Macro Voices podcast. It's very long and extremely tense. So if you are going to listen to it, be prepared, because it's completely different from any other podcast. And as I mentioned, you don't have to agree with me on what I said. But I know one thing. Because of what I said, I've been banned from several TV networks, whether in the Arab world or somewhere else. And that tells you something. Those networks, they did not ban me because they did not like what I'm saying. They've been told, literally, they've been told not to bring me in. So whether what I'm saying is correct or not, etc., it seems like I'm poking an eye, and some people are getting angry because of that. Regarding China, as you all know, China reduced its imports significantly by about 6 million barrels a day, which is exactly the decline in global oil demand, because whenever you reduce imports, you reduce global oil demand by the same number. And then imports recovered. But people have to realize the following. China has not played hardball yet. And if they want to play hardball, we would see it. And they can literally release massive amount of oil and continue the lower imports for at least 4 or 5 months without any problems, aside from all the other games, that military games or military support, etc. So they haven't started yet. All they've done, basically, some refineries reduced their inventories. The total decline is about 50 million barrels, and that's it. This is nothing relative to the 1.4 billion barrels they have. China are making a lot of changes to their energy sector, and part of that is they are ending a lot of subsidies, by the way. So whether to solar, battery storage, or lithium batteries, it seems that the competition and the cost have been intense, and they are trying to end the subsidies, so they let the market basically decide. What is the impact? We don't know yet. But if you look at various scenarios, some of those scenarios could be very serious. Talking about Hormuz again, I would like to warn everyone to be careful with the news. We've seen some of the oil permeables basically promoting stories because it serves their portfolio. They are promoting stories. They are promoted by the IRGC. So all of a sudden, we are talking about literally Americans or Europeans basically literally siding with the IRGC just to serve their portfolio. And that is very sad. And we found out basically all those stories basically being lies. Dubai has not been attacked. Fujairah has not been attacked. Riyadh has not been attacked. But they kept promoting those stories, hoping that oil prices will go up. So be careful with the news unless it is confirmed from credible sources. In terms of coal, we are literally witnessing a return of coal in many, many countries. And what's unique about coal is the resources exist in the energy consuming countries, not in OPEC, not in the Middle East, not in other places. So all of a sudden they have this old value that we used to assign to coal in being a national source. And from a security point of view, you want a source within your country right now after Hormuz. So we are seeing the return of coal from all around the world. And if you look at Europe, I don't think coal is going to decline any farther. For China is going up, for India is going up, for Vietnam is going up, Indonesia is going up. So we are not going to see a decline of coal because of the circumstances. The decline in Gazprom exports via pipelines to Europe is because of maintenance. The maintenance ended. We are going to see a rebound. So we are going to see more imports from Russia by Europeans. And please keep in mind that European gas storage is at the bottom of the 5-year range. So they are going to buy that Russian gas no matter what. Europe is going for or the EU is going for listen to this, the 21st round of sanctions on Russia. And I really wonder what those European leaders think about when they go for the 21st round, because the 20 previous rounds did not work. So have they ever thought about this? Sanctions on Iran basically been going on for a very long time. And listen to this. Iran's oil production in 2025 was the highest since the Iranian Revolution of 1979. With all the sanctions, with all the rhetorics, with everything you can imagine. So for those who think that sanctions work, we don't have even evidence that sanctions work in terms of forcing the other side to change their views. That's why we have the war in Iran in the first place. We have sanctions for almost 30 years, and it did not work. So why going for it again and again, wasting money and wasting efforts and putting more legal problems? To whom the legal problems? To the citizens of the country. It's not the Iranians, it's the Germans, it's the French who will suffer if they violate those laws. It's not the Iranians. So this is really a serious problem. Another issue, U.S. oil companies are back in Iraq, and we are going to hear about many deals coming up. Some of those deals are massive, they are huge. And the question is, what is going on? The Hormuz Strait supposedly closed. Iraq cannot export the oil if Hormuz is closed. So why going there, spending billions of dollars in Iraq where you cannot export that oil unless you know something? Here's the problem. U.S. oil companies left Iraq because of certain very specific problems. Those specific problems still exist today. So why you are going back? If you left for certain problems and the problem is still there, why you are going back? Simply because the decision is political, is not economic. And therefore, if you really want to think about what's happening, back to Macro Voices podcast, if you really think it's about only Iran and the nuclear, think again. It's not about the nuclear program of Iran. It's way larger than that. You have ExxonMobil and Chevron and Conoco going back to Iraq. For what? And whom they are going to kick out? They already kicked out the Russians. Are they going to kick out the Chinese? Are they going to kick out the Europeans? Guess what? Yes. It's not about the nuclear program of Iran. ConocoPhillips just signed an agreement with BP to take over 42% of stake in Iraq's Kirkuk oil field. Back to you.
Super honest. Thank you as always, and wishing you a very good and restful weekend. It's been a busy week, busy months for you. Folks, I'm going to go ahead and close it out for the day. In parting, I need to let you know that futures are down a lot. NASDAQ down almost 2%. S&P down a point. Dow closing in on 0.8%. Gold solidly below 4,000 at around 39.70. Silver at $55. And on the 30-year, we're a bit below 5.1%. Dave Nikovsky, your hand, my friend.
Yeah, I've been posting a lot about the weakness and the triple Qs versus the SPY. I am seeing bottoms in all old economy stocks, from Abbott to Medtronic. I've been, pounding Manpower and Robert Half and the entire group. Corn Ferry, K Force, a number of other ones. As the thing that's saving us right now is that the breadth has been improving for the last 2 months. I've discussed that continuously on this show, and highlighting just a plethora of names. I can't keep up with how many names are bottoming out there. Everything that everyone sold 2-3 months ago has made a bottom. They sold it to buy tech, and tech is at the top. That's human behavior in a nutshell. Everyone's chasing the former Beanie Baby because they think they're missing out. I'll tell you what, they made the bottom and everything. So financials have been on fire. A lot of the consumer staple names bottoming. A lot of energy names. As I mentioned, I took positions last week. They came right back to where they broke out in February in price and relative strength. So if that gives way, that's going to, certainly not be good. But there's so many names. I am just, it's human behavior, right? And I've talked about the divergences between sector performance. Only time I've ever seen it in my 39-year career was back in 2000. I don't need to call this a bubble. I just need to make sure that my clients are getting things that were given up for dead, and that's where the alpha is right now. So the triple Qs, I pointed that out in my timeline, has a diamond pattern and a symmetrical triangle. We're breaking below it this morning. If we don't recover in 2 to 3 days, that's going to be just one ugly downside candle. The SPY was almost able to break out to new highs on a nominal basis, but again, what's holding it up is all old economy. The relative strength is absolutely horrible in tech. I mean, rancid as heck. So I think it's rotten right now. So downside, will bring us to from the high to where we are now. That's the measured downside move on a symmetrical triangle or a diamond pattern. But you can look at the 200-day as a better support level when it comes to that. All things being equal, old economy is much better. I bought, boring crap, Kraft Heinz calls, 2-3 months ago. They're up 65% or more, and they'll be up more today. So there is tons of places and things to do. Just got to find, got to dig through the charts and find the right places, right? And that's what I'm saying. So back to you.
Yeah, absolutely. I'll reiterate, Dave's point in another way. It's not always the things that are making headlines and that we discuss even on this show that are necessarily the places, that need to be focused on today in the market. Look, we tell a story and we chronicle, activities and events and earnings and so forth. But, what's making money today at this instant moment may not be. So, for instance, SpaceX is now down 50% about that from its all-time highs. The stock is in pre-market down another 4% today. However, yesterday on the S&P 500, 74% of the stocks were up an average of around 2.5%. So there is definitely divergence going on amongst stocks, amongst sectors, and it is, that's why you're here, folks, to hear a plethora of ideas, a plethora of information, and I hope we serve that up every day to you. That's what we try. That's our mission. With that, I'm going to go ahead and wish everybody an excellent weekend. Hopefully, it was a week of good information. We will see you back here again on Monday. Please, everybody in the audience, follow our speakers. Thank you for joining us every day. We'll be right back here next week. Take care and have a good day.